The last stock I was talking about was The Honest Company, and that stock is now up 14%. However, I found a new stock, and this CEO just spent $150 million of his own money on his own company. And this stock is still down 73% from its highs, so we have potential for a good reversal play here. And before I continue, be sure to follow because I break down the market and put you guys onto undervalued stocks for free. So the stock we're talking about today is Trade Desk, sitting at $24.05. Now this is where you guys have to start paying attention. The CEO spent $150 million when the stock is severely beaten down and people are no longer talking about it. Now, as for what this company actually does is they decide which ads get presented to you while you're streaming something on Netflix or doom scrolling or when you're on YouTube. So basically, you can think of these people as the middlemen between the people that want to advertise and then the people that have the places where ads would show up. Financially, they made $2.9 billion in revenue last year, and they keep 78 cents of every single dollar that they make. And that number, 78, is very healthy for a company like this. And with the stock currently sitting at $24, you're paying about $12 for every $1 that the company is expected to bring in. And for added context, that is pretty cheap for a company of this size that is still growing. And of course, there are two sides of every coin, so here are the things that you should be mindful of. One of the rough things that this company is facing is two of their largest clients are trying to renegotiate their contracts, so they're trying to pay less money. And then you have Amazon, which built a cheaper version of what they're doing, so they're also taking some of Trade Desk's customers. And also, growth has slowed down significantly. They were at 40%, but now they are only at 10%. So there's a reason that a year ago the stock was sitting at $91 and today we're sitting at $24. And also, two things in stocks that you have to look at is the micro and the macro. The macro in this case is what's happening inside of this entire industry. And then you have the micro, which are the things that are happening in the company itself. So on the macro side, digital advertising keeps growing year after year, and the TV streaming ads are also one of the fastest growing areas in that. And then on the micro side, which is the company itself, their profitability is good and their cash flow is also strong. However, I'm not a financial advisor, so you could really go do whatever you want, but I just ask that you do your own research before you go buying any stock. And if you want to see how our group is beating the market month after month along with the exact entries and exits of our 7-figure traders, then join our free Discord, link in bio.